In previous videos, we discussed price action. We started showing you how we can use price action starting from a larger time frame. We identify support and resistance level, and potentially with the aid of technical indicators, we can identify key points that we can do business. That means we can find good points where the risk reward is going to be in our favor. We discussed this at length in previous videos, but I promised you that in this video I'm going to show you how to have an even stronger conviction. Let's have a practical example what I mean by this. As we discussed, we have resistance here at the highs, here at the bottom we have the support, and if I zoom in, we can see that the euro has rebounded at support and it is now moving higher. But here is the question, why is it moving higher? Why is it significantly moving higher from this area, from support? However, at this level, a few bars earlier, this didn't work out so much. If you are a seller, if you have decided to sell, are you going to sell into resistance here? Because as you can see, we have a trend line. So are you going to sell here at the trend line, or if I zoom out so you can see better, or shall you wait this area where we have the 38 Fibo and the 200 MA that will act as resistance? So you can see this is completely discretionary. There are no clear systematic rules to tell you 100% what you should do. Potentially you can sell here into resistance and it can work out, or maybe it pierces through this trend line and it tests the Fibo, this 38% Fibo first and the moving average before it decides to turn south again. So what gives you the conviction to buy again here, sell there or sell there? How do you know? I can tell you this to save you time. If you use any kind of technical system that is based either on support or resistance, or maybe it is based purely on technical indicators, there is not one concrete answer. There is not a very specific answer. There are no clear mechanical rules that are going to work out every single time. If you depend exclusively on price action, every time we are moving into a different phase of the market, the narrative is going to change and the behavior of price is going to change. So sometimes selling at the trend line is going to work. There are other times that it will not, and the Fibo will work out, and vice versa. So how can you have a comprehensive, a robust solution that you will have a strong conviction and you will know exactly whether you should be pulling the trigger or not and at which levels? And this is what I'm going to discuss with you today. The secret has, let's say, two phases. It has two parts. One has to do with money management and how you manage the trade. And the second part is all about global macro fundamentals. If you nail the global macro fundamentals and understand the narrative, you don't need to be an economist, so don't worry. When I say you need to understand the narrative, I mean you need to understand what the others are thinking, what is the perception in the markets about the future. Please consider this. The price has a dual nature, or rather, the markets have a dual nature. It consists of price. You can see this, it's price, it is a very specific number, but it is also expectations that you cannot see, expectations about the future, something that hasn't materialized yet. So what matters is the price, of course, this is very important, but also expectations about the future, what we expect to happen next is very important. So you need to be aware of the narrative. Why the euro has rebounded strongly, let me zoom in, from this level, and it didn't do it previously, but it did now, It is all about the narrative. And I'm going to switch to a trading view chart to show you something so you understand the importance of understanding the narrative and global macro. So I have switched to a trading view chart, and what you can see here is the US 10-year government bond yield. The reason, my friends, that the Euro USD is moving up in an emphatic fashion the last few days is because US yields are moving lower. This has to do with expectations or about expectations regarding the central bank and its monetary policy. People believe that the Fed will not be so aggressive in hiking rates. They will be forced to pause, which they have, but potentially in the future they will have to cut rates. Why? Because it is getting more and more difficult. We have geopolitical conflict. This is why this is affecting expectations and the yields are retreating. Is this true? Well, it is a hypothesis. It remains to be seen. But are you aware of the expression buy the rumor, sell the fact? What happens now is we have a retreat from the highs in the yields. It is moving lower. This is why the USD is losing strength at the moment. Whether this is going to remain there, whether this is true and it's going to last for a couple of quarters or even more, or it is just a correction, it remains to be seen. We need to evaluate other economic indicators and other data before we have a complete conclusion. But let me show you even more why understanding global macro is important. So what is happening now is the yields are retreating. This is why the USD is losing strength. The other thing I want to show you is this. So what I have here, sorry, let me get rid of the ads, there you go. What I have here is the yield curve. So how do I build this? Let me show you, let me remove this, so I will show you step by step. You type US 0 to Y, and this is the 2-year yield minus US 10Y, and you press enter. And what you see is the differential between the 2-year and the 10-year yield in United States. So you might say now, okay, so why is this important? How is this affecting you as a trader? This has everything to do with Forex trading. This is a weekly chart. What I'm going to do now is I'm going to overlay, and I'm clicking the plus sign over here, and I'm going to overlay the dollar index. So it's DXI, and I'm going to hover over this, and I'm going to choose new price scale. So I'm doing this, wait a few seconds until it loads. So let me do it again. Here is the dollar index. I click new price scale, and there you go. It works out this time. And what can you see? Please keep in mind that this is a weekly chart, so it is a long time frame. So let me do this. Let me sort out the chart a little bit. You can see that the dollar index is moving in the direction of the yield curve. When the short-term yields rise over the longer-term yields, so you can see this here, the dollar index is rising together. When the yield differential is dropping, so does the dollar index. Lately, since after the summer of 21, you can see short-term yields have risen considerably, and so has the dollar index. Now we have a correction, as you can see here, and we have a correction in the dollar index as well. So you can see the move of the dollar index against other currencies is quite correlated with what is happening in the differential between short-term and longer-term yields. And you might say why this is happening. This has to do with the perception about growth, monetary policy, perception about inflation, the path of future interest rates. But all expectations regarding this can be displayed, can be attributed to the yield curve. So all kinds of information are included in the yield curve. And you can see the dollar index moves together with the yield curve. So how are you going to use this as a Forex trader? You need to be aware of the narrative. What is happening with the yield curve? If we have a top, if that's it, if we have reached the peak, when it comes to monetary policy. This will give you the conviction whether you should be selling the dollar or buying the dollar. So next time you have a chart like this down here and you are wondering, shall you go ahead and buy the euro, leave a larger stop, or perhaps try to sell it here? I can tell you right now that the reason it moves, it is all about the fundamentals. And if you are aware of what is happening, you will have confidence to pull the trigger here and buy the euro or sell it there. When you see that a big move is happening in the dollar index and the yield curve is rising. I mean, the short-term differential against the long-term is moving to the upside. So when you notice things like this, you have the conviction to pull the trigger. And also something very important, you do not trade for 20, 30, 10 pips. You go for big moves that are 500, 600, 700 pips in length. So let me go back to TradingView and I will do the same, but I will do something else. I will show you that besides looking at the differential between US interest rates, you can do the same. So let me go here and let me do this. You know what? Let me keep it for now. I want to show you one more example, minus US 10, but I forgot to share with you earlier. So this is it, the dollar index. What if I click compare and type Euro USD? What do you expect to see? So here is the Euro USD. So as you can see, when the yields are rising, when they have started to rise and the dollar index starts rising, look at the top in the euro. The euro starts to drift lower when the yields pick up. So do you see how useful this is? It helps us to pick major points and have a strong conviction. But you can do another thing. I can go here and I can type AU, the Australian yields. I want to compare them with the US yields. So not only you can compare the differentials within the country, you can also compare the interest rate differentials between other countries. Different countries. So AU is Australia 10Y minus US 10Y. I click enter. There you go. Here is the dollar index. I will remove it for now. I don't need this. So here is the differential. So if I add the Aussie, what do you expect to see? Aussie USD. So I will click new price scale. Again, do not expect 100% correlation. But you see, when the yields drop against the Australian interest rates, so that means that the US yields are rising faster than the Australian ones, the yields move down. You see that the Aussie is dropping. The yields are moving up, the Aussie is rising. We have a top over here, it moves down, so does the Aussie. There are other factors. There are growth differentials, inflation differentials. What is happening with copper? This is very important. There is a correlation, I can tell you this, let me add this, between copper and the Aussie. So copper futures, choose this from COMEX, new price scale. So you can see that the Australian dollar is very correlated with what is happening with copper. Why? Well, this has to do with exports to mainland China, and this kind of exports play a crucial part in Australia's GDP, in Australia's growth. My point to you is, you don't need to be an economist if you understand to observe certain fundamental relationships, if you can understand global macro, and if you can understand the narrative, then you will have a strong conviction to pull the trigger. You will know whether you should be buying the Aussie or sell the Aussie, buy the dollar or sell the dollar, buy euro and so on. And you can apply this kind of intermarket analysis in equities. You can apply this in FX, in bonds. You can apply this in any kind of market. But the significant point is, if you are focusing exclusively in Forex, you will know whether this is a major point or not, whether this is a major low or not. The reason it moves, or the reason it is a major low or high, it is not about price action. It is all about global macro fundamentals. And what we do at Fotis Trading Academy, we go into detail to explain you this. We have a whole course that covers the relationships and how to go ahead and do a global macro analysis without being an economist. So you can go ahead, gain practical knowledge so you can apply this in your trading. Thank you for watching. See you in the next video.